for this presentation. It consists 4 parts, which is the first part is overall ratio analysis, and the second part is the pattern of credit risk exposure, and the third part is the proposal of mitigation, controlling and monitoring techniques, and the last part is the conclusion.
Okay, I will continue the presentation on the operational risk of bank leverage. So we choose to do our bank analysis for CIMB, Islamic Bank and Bank Muamalat by using the Tier 1 leverage ratio. The figure for Tier 1 capital and consolidated asset of CIMB and Bank Muamalat can be retrieved from the bank annual report in order to find its leverage. This is a ratio that accurately predicts the financial situation of a bank and its creditworthiness. So overall, we can see the pattern of the CIMB Islamic Bank leverage from the year 2016 to 2021, which indicate a fluctuating pattern. In 2016, the leverage value was 5.49%, that it started declining for 2 years, after which in the years 2017 and 2018 with 4.97% and 4.91% respective. Later, the graph shows a 5.19% rise pattern in 2019 and continued growth of 5.99% of bank leverage in 2021. Generally, this value indicates that CIMB Islamic Bank has a quite strong financial position, as the ratio is above 5% for 4 years from the seized period. So it also serves as an indicator of a bank's strong financial base. Thus, the higher the leverage ratio of Tier 1, the more likely is the bank will be able to withstand a negative shock on its balance sheet. Okay, so next, the figure also show the leverage of Bank Muamalat from the year 2016 to 2021. Starting the first 3 years from the 2016, the graph does not show any significant change for 3 years between 2016, 17 and 18. The bank leverage was 8.22%, 8.43% and 9.12%. However, a sudden surge happened dramatically in 2019 and with 110% of bank leverage. So this should be said to be linked with the COVID-19 pandemic that suddenly hit the world at that time. So a high leverage ratio means that the bank have more capital reserve and are better placed to withstand a financial crisis. But it also means that less money to lend, which reduce the profit of the bank. Finally, from the perspective of leverage ratio between CIMB and Bank Muamalat, we can assume that Bank Muamalat give a better leverage since they give a higher record of ratio rather than CIMB Islamic Bank from the year 2016 until 2021. The concentration ratio is a measure of a company's size compared to the rest of the industry. The concentration ratio is calculated by adding the market share percentage of the industry largest number of companies. So the concentration ratio range from 0 to 100% and indicates the degree of competition of each industry. Hence, the higher the concentration ratio, the more concentrated the industry.
Now, we move to the performance analysis ratio. There are 5 types analysis we do in this ratio. Firstly, net interest margin we call NIM. Based on the calculation analysis we do, the NIM for Muamalat Bank shows the decrease and increase every year. This demonstrates that both banks have a large impairment value in the last year. However, when contrasting the two, this NIM ratio shows that Muamalat Bank is superior to CIMB Bank. As a result of two banks continue positive NIM ratio values, we can draw the conclusion that they are truly not bad banks. Second, return on average equity, ROAE. They demonstrate that when these two banks are compared, CIMB Islamic Bank's ROAE ratio performs better than Muamalat Bank's in the middle year 2019. However, Muamalat Bank is not as performance better in 2020, displaying a large gain when compared to CIMB Islamic Bank. Thirdly, return on asset, ROA, leads to the conclusion that CIMB Islamic Bank is probably a less successful trading company. This is due to the poor corporate management at CIMB Islamic Bank. In conclusion, it is clear for the calculation finding that CIMB Islamic Bank is still less effective than Muamalat Bank. Fourthly, return on equity, ROE. The value of the ROE ratio for Muamalat Bank has shown an increase and decrease every year. This can be concluded that although Muamalat Bank's ROE value in 2020 is low, but it is better when compared to CIMB Islamic Bank ROE value in 2020 as well. This indicates the Muamalat Bank will adaptably draw investors to the company if assessed in terms of the ROE ratio versus performance. This is because Muamalat Bank's ROE ratio for that year will rise the company's Lastly is earning per share (EPS). The EPS analysis value for both banks show the rates of increase and reduction occurring in each of 6 years based on the ratio accumulated in our calculation. When comparing the two, CIMB Islamic Bank is the best company in this evaluation. This is because the value of the increase that has been shown in the both bank is higher CIMB banks compared of the value of MUAMALAT Bank. This can be stated as the better the EPS value, the business is doing for the company.
Next, I will share the result for the Z-score for both banks. For the result, it can be inferred that the value of Z-score is below 1.8 from 2016 to 2021 for CIMB Bank and Bank Muamalat. This indicates that these banks are in the red zone, which means the financial position of these banks is in distress and that the banks are likely to head toward insolvency in the years ahead and file for bankruptcy. In addition, this bad and weak financial health demonstrate CIMB Bank and Bank Muamalat financial management. This helps the investor make a wise choice by cautioning them of the risk of investing in a bank which is in the distress or grey zone. The greater the Z-score is, ideally over 3, the more likely the investor is to invest in the bank because the Z-score over 3 indicates a strong financial position and stability of the bank.
Next, in measuring the bank's performance, usually we use bank-specific variables for the indicator. What is the bank-specific variables? Bank-specific variables consist of credit risk, total deposit, total asset ratio, asset size, and many more. However, in this research for the bank-specific variables, we only touch on a few points only, such as asset quality, cost-to-income ratio, equity ratio, and liquidity. First of all, for the asset quality reflects the quantity of existing and potential credit risk associated with the loan and investment portfolios, other real estate owned, and other assets, as well as of balance sheet transaction. Based on the graph data beside, it shows the difference between the asset quality ratio for banks Muamalat and CIMB Bank in 2016 until 2021. In general, we can see that in 2016 and 2017, Bank Muamalat's asset quality is much greater than CIMB. And then in 2018 until 2021, you can observe that CIMB asset quality is much greater than Bank Muamalat. Next, for the cost-to-income ratio. The cost-to-income ratio is a metric that allows us to gauge how efficiently a business or organization is functioning. The cost-to-income ratio is one of the approaches for determining how much money is spent on operation and how much revenue is generated. So as you can see the graph beside, we can clearly understand that Bank Muamalat is facing a huge problem, especially in 2020, where it holds 72.94% of cost-to-income ratio. The costs are rising at a higher rate than income. This could be the result of the sequences of the contagion of COVID-19, which lead to the closure of economic mobility and the issuance of the Movement Control Order, or we call it MCO, in March 2020. On the other hand, CIMB has demonstrated and maintained their achievement in keeping the cost-to-income ratio still lower than Bank Muamalat and steady for 5 years. Furthermore, it is the equity ratio. The equity ratio is a financial metric that measures the amount of leverage used by a company. It uses investments in asset and the amount of equity to determine how well a company manages its debt and fund its asset requirement. In other words, this ratio specifically shows how much of the company's assets were produced through the issuance of stock shares as opposed to borrowing money. A corporation with a higher equity ratio often had a little to no debt to successfully fund its assets requirement. From this result, we can notice that both banks have their own upside down. Even though Bank Muamalat has a higher percentage of equity ratio, and that makes the company much more safer and much more profitable to invest on than CIMB, but CIMB has more steadiness in their growth of their bank, even though the increase is just incrementally. Lastly, liquidity. Liquidity refers to the efficiency or ease with which an asset or security can be converted into ready cash without affecting its market price. The most liquid asset of all is cash itself due to its ease and speed of conversion into other asset. From this result, we can observe that the liquidity ratio of Bank Muamalat is higher than CIMB Bank. It means that Bank Muamalat has higher chances to pay off their debt and convert their asset into cash.
Next, we go to pattern of credit risk exposure. First, we will see the capital adequacy ratio for CIMB Islamic Bank and Bank Muamalat. What is capital adequacy ratio? The capital adequacy ratio refers to a ratio that is published as a percentage of a bank's risk-weighted credit exposures and serves as a measurement of the amount of capital that is available to the bank. Based on the analysis, CIMB Bank Islamic recorded the highest capital adequacy ratio in 2021 with 18.85% and the lowest capital adequacy ratio in 2016, which is 16.71%. From the year 2016 until 2019, Bank Muamalat Group shows an increasing trend by year. Meanwhile, the pattern of credit adequacy ratio for both banks is fluctuating in the 6 years from 2016 to 2021. From 2020 to 2021, CIMB Bank Islamic Group experienced a capital adequacy ratio that drastically increased from 16.76% to 18.85%. The value of capital adequacy ratio for CIMB Bank Islamic Group is not similar to Bank Muamalat, which from 2016 to until 2018, CIMB Bank Islamic shows a decreasing pattern while Bank Muamalat shows an increasing pattern. The second ratio is non-performing financing ratio. The non-performing financing ratio is the ratio of the amount of the bank's non-performing financing to its total outstanding loan. If we compare between these two banks, we could see that CIMB Islamic Bank has the best NPFR compared to Bank Muamalat because throughout the 6 years period, they managed to keep the percentage below 2% with the lowest ratio of 0.66% in 2017 and 2019. Compared to Bank Muamalat, even though the latest 3 years their NPFR has good ratio that below than 1%, they had experienced the worst NPFR ratios from 2016 until 2018. But they can manage to change the NPFR from year to year. From the analysis, we can say that CIMB Islamic Bank hold a better NPFR percentage because they constantly manage their ratio below 2% compared to Bank Muamalat. But both banks did an excellent management by managing all the financing, resulting in a smaller percentage of the NPFR, which leads to a lower risk for both banks. There are some factors that could influence the credit risk. From our findings, we have identified only 9 main factors out of too much factors as being significantly influenced by credit risk among Islamic banks based on my previous research, based on macroeconomic factors and bank-specific factors. For factor based on macroeconomic, the factors are from the gross domestic product growth rate, the unemployment rate with a 1-year lag, the exchange rate, and the money supply. For factor based on bank-specific, the factors are the bank capital, the bank size, the bank profitability, the management efficiency, and the risky sector.
Okay, next, of course, in the credit risk mitigation technique, we need the collateral. So any type of financing or all extension of credit that are deemed wise will definitely be accompanied by collateral. This is because each credit must be properly and adequately secured with something that is valuable. So next, the Bank Group Risk Committee has the authority to approve new acceptable collateral, which include both physical and also financial assets. For instance, physical assets which include the land, building and vehicle, meanwhile the financial assets include cash deposit, unit trust and shares.
Secondly is guarantee. Guarantee is one method of implementing unfunded credit safeguard. Guarantee is a written agreement with a third party who bears less risk than the original counterparty of the exposure and who will assume responsibility for the claims in the event of the original counterparty default. Guarantees help to raise credit quality by supplying extra collateral. This can be done by requiring the third party to make payments of a credit obligor default or does not make payments. Strict eligibility requirements must be certified to qualify as a guarantee for credit risk mitigation under the Capital Requirements Regulation. The guarantee's goals is to promote lending and investment in emerging markets and developing nations by lowering significant risk. As a result, the current team will be able to lower the specific risks that are major project roadblocks.
Okay, now I will explain about monitoring. The monitoring system is used to ensure the smoothness of a journey or development and to meet time constraints. With the development of technology, various monitoring methods can be created and developed to better control the risk. Banks have a high need for risk monitoring that needs to be done daily. Voluntary monitoring can increase investor trust in companies, while mandatory monitoring encourage employees to work efficiently. Proper monitoring and following set time flow can give employees the opportunity to organize tasks and prepare emotionally. Experienced officers are an important element for quality monitoring results and achieving expected targets. Training risk monitoring officers regularly and giving employees specific information about monitoring dates and methods can reduce the risk that banks will face as a result of lack of competence and emotional illness.
And now for the controlling technique. The technique that can be used to control a risk is continuous monitoring of individual credit exposures and the performance of credit portfolios. Next, identifying early warning signs of a counterparty declining ability to fulfill commitments and deciding if credit exposures continue to be in compliance with contractual obligations, risk tolerance, and credit risk policy. The third is must take into account the potential effects of domestic and international changes in the operating environment on the credit risk profile. And the last one is must outline the roles, duties, and reporting structure for monitoring activities. Okay, and for the conclusion part, the analysis for both banks on 2016 until 2019 before the pandemic start shows that they are in a stable condition. CIMB Islamic Bank also recorded profit on the pandemic era between 2020 until 2021. Next, the liquidity analysis for both banks shows good condition, and the stability analysis ahead of 5 years looking not quite really good.